This is from 𝐒𝐚𝐴. He says, still think that Meta and SpaceX should make phones. He's wanting them to make phones. And Elon Musk responds. He says it's not out of the question at some point. It would be a very different device than current phones, optimized purely for running max performance per watt neural nets. So there you go. Maybe we're going to get in the phone business after all. And what kind of a company would be making all those phones? We'll see just in a second when we get into that story. Hang in there. Okay, so Tesla's put out a thing this morning. He says that Tesla, this is from Tesla, 4680 cells are no longer framed as experimental. They are now a low cost supply security lever. As I've mentioned over the last few days, we're probably talking about sub $50 per gigawatt hour. Terawatt, I forget. I think it's gigawatt hour. Tesla emphasized manufacturing learning curves, not chemistry breakthroughs. So they just wanted to make sure that they manufacture the thing as inexpensively as possible. That's a signal they think the physics risk is behind them at this point. This reduces long-term gross margin risk more than people realize. So no matter what happens geopolitically, no matter what happens to the cost of lithium, no matter what happens to other costs that might be associated with battery manufacture, Tesla is now in the driver's seat and will always be the lowest cost producer. They go on. Our lithium refinery commenced pilot production and is in the first spodumene to lithium hydroxide refinery in North America, leveraging a simpler, cheaper, and more environmentally friendly process. This refinery enables us to domestically produce critical materials in support of energy storage, battery manufacture, and ultimately for EV growth. We've begun to produce battery packs for certain Model Ys with our 4680 cells, unlocking an additional vector of supply to help navigate increasingly complex supply chain challenges, which are caused by trade barriers and tariff risks. We now produce dry electrode for 4680 cells with both anode and cathode made in Austin. This is all so critical. We expect both domestic cathode materials in Texas and LFP lines in Nevada to begin full-on production in 2026. All right, then we have this. Are you ready? Recent reports. This, by the way, this is a Grok prepared consolidation of all of the articles and all of the comments on X and everything else up to date. This is the way Grok is supposed to work. Recent reports from Reuters and Bloomberg indicate that Elon Musk's SpaceX is in preliminary discussions to merge with XAI, potentially swapping XAI shares for SpaceX equity. This would consolidate SpaceX rockets and Starlink satellites with XAI's Grok platform and compute resources, aligning with Musk's vision for orbital AI data centers powered by space-based solar. SpaceX has formed a Nevada entity, two of them actually, K2 Merger Sub, that can facilitate such a deal. As an alternative, SpaceX is also exploring a merger with Tesla, an idea reportedly supported by many investors. This could integrate Tesla's energy storage, robotics, and real-world data with SpaceX capabilities. Tesla's already now investing $2 billion in XAI and supply batteries, showing growing ties. These talks precede SpaceX anticipated blockbuster IPO, potentially in mid-2026. They would potentially, the company would be valued at 1.5 trillion and potentially raise up to 50 billion. No deal is finalized. Discussions remain early stage. No official comments about any of this from the companies. And then, of course, there are people out there saying, well, it's going to be all three. Now, that would be me. That would be Larry Goldberg. Larry will be on later today. You don't want to miss that show because Larry has got plenty to say on that. And then you've got Brian Wang, who will be on later tonight also to talk about this because, well, we know Brian Wang is the expert on SpaceX when it comes to the financials with regard to the future, and you won't want to miss that show either. Market reaction: Tesla shares rose in after hours trading following the report and showed mixed performance overall this morning. It was up last time I checked. It's not like we're setting the world on fire yet, but it's up. Rumors and X commentary highlight sci-fi synergies. Starship delivering Optimist to Mars, orbital AI compute multiplying energy efficiency, and a unified Musk economy empire for multiplanetary civilization. Enthusiasts on X see massive upside for Tesla via space/AI moats, while skeptics question orbital data center feasibility versus Earth-based alternatives. Well, it's not all about that space-based stuff. Polymarket, space-based data centers, I mean by that. Polymarket odds recently favored a SpaceX AI tie-up. Any merger would face shareholder approval, regulatory scrutiny, and potential antitrust issues, although I can't see what the antitrust issues would be. Musk's history of intercompany integration makes deeper consolidation plausible, but the scale here, unprecedented. But that's what Elon likes to do. In fact, I think this will intrigue him more than almost anything else as having the largest, most crazy merger in history, putting together what would potentially maybe be the largest market cap company in the world after the IPO later this year. As of now, these remain discussions without official confirmation, and outcomes could shift based on investor feedback, regulatory reviews, or market conditions. CNBC says, forget the Tesla you knew. Yeah, you can tell. This is Canaccord Genuity in a note following Tesla's fourth quarter earnings report. The Tesla of yesterday is gone. We believe Elon Musk has reached a definitive burn the ships inflection point, a total commission to a vision that leaves no room for retreat. The analysts recommend buying the stock. After capital expenditures dropped 24% last year to $8.6 billion, Tesla indicated on Wednesday that the figure will more than double in 2026 as the company shifts business away from electric vehicles and further into artificial intelligence with a focus on driverless technology, humanoid robots, and eventually the chips that underpin these long-promised ambitions. But then, of course, there's also the solar business. Well, here's this last night. The Tesla Solarama event took place last night on the rooftop of the Tesla Diner in West Hollywood. It served as a mini launch conference for Tesla's overhauled residential solar panel and new mounting system, featuring key Tesla energy leaders like Colby and Seth from the team. A full keynote video from the event has circulated widely on X. Maybe you've seen it. Here's the top takeaways. Number one, the new in-house solar panels Tesla unveiled feature updated 420-watt panels. This is up from 410 with 20.5 efficiency. They feature cascading cell tech with 18 power zones per panel, 3 times more than the normal 6. And this gives superior performance in partial shade and or, foggy days, etc., reducing energy losses. 2, faster, simpler installation. The biggest innovation is a groove-based, rail-free mounting system that snaps panels together. This cuts installation time by 33%, reduces roof penetrations by 15%, lowering leak risks, and works universally on shingle, tile, or metal roofs. I will tell you that my home in West LA, I ended up not with Tesla in terms of the solar because I couldn't put it on a steel roof. Addressing labor costs is the main barrier to residential solar adoption. The aesthetic and practical upgrades, all black design with frame integrated looks, sits lower and cleaner on roofs, emphasizing on better durability, easier scaling, integrated with Tesla's ecosystem, the Powerwall, of course, and also future energy products. 4, Tesla energy momentum. This refresh follows strong Q4 2025 growth in Tesla's energy division, up 25%. It positions Tesla to vertically integrate solar supply chains, aiming for massive U.S. production scale. Of course, what's not mentioned in this analysis by Grok is that, well, there's a solar fab in our future, and if Tesla is what they're proving here is that they are leading edge. I mean, they're once again bleeding edge in terms of solar technology, and the solar technology will then be incorporated into units that will be used not just for rooftops, but also for solar farms. The event generated buzz on X among Tesla enthusiasts for revitalizing the stagnant residential solar segment, with potential margin boost for Tesla Energy in 2026. No pricing or any of that stuff available yet. Cern Basher says this today. He says, look, Tesla is going to be creating Taiwan's GDP with just one factory in Texas. Here's some more crazy optimist math. Here's a breakdown of the revenue contribution for each of Tesla's existing factories. These numbers are rough estimates, but Giga Shanghai is Tesla's current jewel in the crown, likely accounting for about 25% of Tesla's total revenue. On the Q4 earnings call, Elon announced that the Model X and X lines at Fremont would be taken down and replaced with a 1 million unit capacity Optimist line. If each of those Optimist bots sells for $75,000, which Cern and I believe is very low, they're worth about $400,000, but and we also think it could rent for $100,000 a year. But he says, let's just use $75,000 as the number. The line would generate revenues of $75 billion, virtually doubling or almost doubling the overall sales for Tesla. We also know that Tesla is building a 10 million unit capacity line for Optimus at Giga Texas, the 8 million square foot building. Using the same assumptions, that factory would generate about $750 billion in revenue, putting it at the very top of the revenues for any company out there. This is greater than the GDP of countries like Belgium, Ireland, and Sweden. It's knocking on the door of Taiwan and Switzerland's GDP. And let's not forget about robotaxi. Another $750 billion in revenue could be generated by a fleet of about 1 million robotaxis, each only charging a $1 base fare and $1 per mile. Unleashing these two deflationary forces into the world, and you can see why Elon calls it amazing abundance. So I don't understand why Tesla is accelerating. So if you don't understand why Tesla is accelerating their CapEx spend this year, this is why. They will create GDP of entire countries in these new factories. Just think about for a minute the value of a company that can create the GDP of countries with just a single factory. This is Randy Kirk. That's all the Tesla news. Well, no, there was probably more, but I just ran out of time, and I figured you'd run out of, I couldn't do it. All right, that was it. I couldn't do better. Subscribe, please. That would be a huge help. And then I'm telling you, these little videos that I'm putting out, they're 15-minute videos each day about the political situation as we head towards the midterms. Yeah, you do have to join. You have to join here. And I'm getting quite a few people joining here on YouTube. Or you can join Patreon, or you can subscribe on X and get those videos each and every weekday of the week. Kevin Warsh has been preparing to lead the Federal Reserve for more than a decade, and the President of the United States announced today that he is the pick. He thought he had the job in 2017, but then President Trump had doubts. He says Warsh looked too young, and his history of worrying about inflation suggested he might not keep rates as low as Trump wanted. So he picked Jerome Powell. Warsh kept at it, criticizing Powell publicly, cultivating ties to Trump's circle, and touting the president's economic agenda. Now, at 55 years old, he finally has the job. I guess he looks old enough now. If confirmed by the Senate, Warsh would succeed Powell, who has been the target of sustained attacks from the president. You might have noticed that. Powell's term as chair expires in mid-May. Warsh served for 5 years on the Fed's Board of Governors, helping navigate the central bank's response to the 2008-2009 financial crisis. He left 15 years ago and spent much of that time criticizing the institution. Former colleagues say his rhetoric shouldn't be mistaken for rigidity. He's not an ideologue, says Randall Krausner, who served as the on the Fed's board with Warsh from 2006 to 2009. Since I've known him, he is someone who tried to get things done. His approach is getting things done. All right, CNBC has this morning, actually yesterday. Apartment rents continue their slide into the new year as fresh supply still makes its way through the market and landlords strive to gain pricing power over a struggling consumer. It has nothing to do with the struggling consumer. It has everything to do with outmigration. The national median rent in January was $1,353, a drop of 1.4% compared to one year ago, according to Apartment List. This is now the fourth consecutive winter with a pronounced off-season dip and is the largest annual drop since September 23 and the lowest January rent since 22. Rents are now 6.2% lower than their peak in the summer of 2022. And yet, the CPI doesn't seem to, even yet, isn't figuring this out. The national vacancy rate was 7.3% in January. That's a record high on Apartment List Index, which dates back to 2017. Units are also taking an average of 41 days to get leased, 4 days more than in January 2025, and another high for the index, again, which has only been out for 8 years. The Producer Price Index came out this morning, and the market was not happy because it increased 0.5% in December, seasonally adjusted. The U.S. Bureau of Labor Statistics reported. Final demand prices advanced 0.2% in November. So remember, these were delayed, and so we got like 2 of them in a row. And also 1.1% in October. On an adjusted basis, the annual rate was 3.0. Now you take those three together, and this is what you really need to do. You got 0.1, 0.2, and 0.5, and all of a sudden you're looking at around 0.2, in the ballpark of 0.2. The December decrease in prices for final demand can be traced. Did I say decrease? The December increase in prices for final demand, which is dramatically a biggest part of this, can be traced to a 0.7% advance in the index for final demand services. Prices for final demand goods were unchanged. The index for final demand less foods, energy, and trade services moved to 0.4% in December. Prices for final demand less foods, energy, and trade services rose 3.5% for the year. We'll talk about prices again in a minute. CNBC says that 2 out of 3 Americans surveyed, 66%, oh, that's clever of them, are worried about paying for health care. This is now the #1 household necessity, such as utilities, food and groceries, housing and rent, gasoline, transportation. It's the #1 thing on people's mind right now, according to KFF, a nonpartisan health policy research group. Healthcare typically ranks as a second-tier election issue in KFF's regular polling, it said Shannon Schumacher, a senior survey analyst. But not this year, she said. One likely reason, most adults said their healthcare costs have risen in the past year, including a substantial share, over 20%, who said their healthcare costs have grown at a faster rate than other expenses like utilities or food. Okay, they can think that. So again, these surveys are a little weird. The #1 thing that is impacting people's budgets right now is car and homeowners and renters insurance, not health insurance and health costs. And every survey shows this. And maybe this is an indication that healthcare has moved into first place is based on headlines again. And also on the fact that maybe truly, if they're honest with themselves, people are like, oh, the grocery bill's not so bad. Oh, the gasoline bill, not so bad, et cetera, et cetera, et cetera. Truflation says that overnight, we're still at 1.23, same as yesterday. Goods at 1.1, core at 1.44, services at 1.3, and PCE at 1.45. Now, This Truflation report shows a precipitous drop in since the middle of December, when the CPI on this report was at 2.5. On the other hand, this would also explain the lagging numbers from all the other agencies who are still looking at December numbers. On the other hand, the drop is so rapid that I am expecting some corrections this weekend. Truflation almost always has a big adjustment on the first day of the month, sometime maybe the second day of the month. So I'm expecting this to pop up, not down, but up. That's what I'm looking at right now. Even though we know that housing is down, even though we know his rents are down, we know the gasoline's down, oil is down, all these things, I'm still expecting that we'll see a little pop. GDP now dropped their fourth quarter estimate now to 4.2% growth. That's still solid for sure, and nobody can argue that that's not a good number, but it's well under the 5.4% from the last report. They state that this was largely due to the surprising trade deficit numbers, which were higher than expected. Well, okay, that's a lot of news, a lot of economic news, a lot of Tesla news, a lot of things going on right now. And so you might be unshocked. You shouldn't be shocked if there's, some activity in the stock market reflecting that. So we got Tesla up 4.16% this morning on all of this news, and it's going up and to the right now at $434.14. You got the Dow down 0.4, you got the NASDAQ down 0.48, and the S&P down 0.35. Once again, as I said last night, I'm looking at the S&P at 6,944. That is $60 away from its all-time high. So we're not talking about a market that is in big decline. You do have Apple recovering. Apple said, hey, we don't know where we're going to get enough memory later in the year. Well, you got to say that kind of stuff, because if you don't and you knew about it, it's a violation. So that is everything else about Apple's report yesterday was absolutely fine. Beat on revenues, beat everywhere. And talking about the future, they got plenty. They expect lots and lots of continued. I think they said 13 to 15% revenue growth coming up in 2026. But Apple is down this morning, 0.72. NVIDIA is down a little bit. The rest of the Mag 7, except for Meta is down 2.3. I guess that would be kind of trimming off some of those profits from the rest of the week. The VIX is at 17, which is pretty neutral. And people are saying that the final decision now to hire Walsh for the Federal Reserve, that was a stimulus this morning to the overall market, although you can see it's still down a little bit, but it was looking like it was going to be down more. Waiting to see what's happening to gold. Okay, then we got Cathie Woods are pretty much all down. As we can see, the bond market is definitely going the wrong way, and that's probably impacting all that. We've got 4.24 after going up 1.6 basis points this morning. That is less than it was earlier, so maybe we're going to see that modify a little bit. We have got oil prices up 34 cents this morning. That's 0.52 to 65.75. That is the highest, again, we've seen in a long time. I get a guess that this is still Iran that's creating the problem, but I'll look into it a little deeper if I can slip it into the rest of my day here. Natural gas is back up 4.82 at $4.10 after falling fairly good the last few days. Now listen to this. Are you ready? Gold down 5.22% at 5,041, almost back to 5,000. Silver down 13% so far today at 99,525. That is now obviously under 100. These are shocking drops, except if you're me, who's been saying it. It's got to happen sometime. They're way out over their skis. It has to come back down. Copper down 2.73%. At $6.03. We've got the dollar is mixed this morning. So with all the rest of what you're hearing about, interesting that the dollar is down a little bit against the yen, up against the euro. Bitcoin down another 1,448 at 82,483 for a new low in recent history. Ethereum is staying above their, I think they might be above that low that they hit a month or so ago. They're at 2705, though, way under that $3,000 breakpoint and down 3.23 for the morning. So there you go. That is what's happening. Overall, I've already mentioned to you that you got Larry Goldberg and Brian Wang coming up later today, and I mean it. This is like you got to hit notify. And in order to hit notify, you have to be subscribed. You don't want to miss either one of those shows. Larry Goldberg has been doing a tremendous amount of work in analyzing the various merger possibilities, how those might look. He's done it on my show. He's done it on X. He's done it elsewhere. Then you got Brian Wang coming up, who is the expert of experts when it comes to SpaceX. I don't hold a candle to his understanding of what's going on at SpaceX. So SpaceX is kind of the lead on this entire thing, not Tesla. SpaceX is the lead in this merger conversation. And so we need Brian Wang's analysis. And Brian is definitely, he's got some very clever methods that he's got in mind for how to play this entire thing, including, finding these ETFs and whatnot that have SpaceX in their portfolios. All right, what else? Last night, oh my goodness, same thing. All I can do is go on and on about these people. Last night, Bradford Ferguson was on, Cern Basher was on. A lot of you already have seen both of those shows, but I'm going to put the cards up anyway, because if you didn't look at them, I mean, yeah, as always, these guys are delivering on my program. And I think you want to go take a look. And it's very different. It's very different. Whenever you see these guys on other shows, you're getting a completely different look than what happens here because of me. That's, I have to go. That's it. I've said enough. Been great talking to you.